Hi, this is Joe Rabil with Rabil Stock Research. So I get a lot of feedback, people emailing me. They've either bought the book or gone through the courses or they're monthly subscribers. And the feedback has been really positive. And most of it centers around a specific kind of theme, which is they're using my approach, my strategy, the basics of my strategy, and they're claiming that it's transforming their trading. So I love to hear that, but I'd like to just give a little lesson today on the basics and how this strategy can be used in different time frames depending on what type of a trader you are. So we're going to go through that. I'm also going to take a hard look at the market, obviously, with all the movement. We've got some volatility and starting to see maybe some rupture take place in the general market. And then we're going to go through the individual symbol requests that came through. Let's go ahead and get going. All right, so I've got 4 time frames up, and I'm doing that for a reason. I've got a monthly here, weekly in the bottom right, a daily in the upper right, and then an hourly in the upper left. And the reason why I'm doing all 4 time frames is because I'm going to show different setups in different time frames. So I like to use the monthly and the weekly together, right? And the weekly and the daily together, and then the daily and the hourly together. So this I would consider to be a swing trade. This is more of like an intermediate term swing, right? And this is more of a longer term trade. All right. These trades from the monthly and weekly can last, years, in fact. But I would say the average holding period is somewhere around 7-8 months, something like that. The average holding period for this is around 30, maybe a little bit more, 30 days or more. And then this is anywhere from a week or 2 for this type of trade. All right. Now, what I want to do, I want to explain just the basics to keep this really simple and just understand what we're trying to identify. So I'm going to start with the monthly chart of Salesforce.com, and you can see this breakout move to the upside. So we have strength to the upside. Now, a lot of times the stock will break out. You don't know for sure that it's got the strength. So what I do is I confirm it with MACD and ADX. And if I get new highs in those, taking out prior peaks and confirming the price action to the upside, then I know I have a potential setup taking place. Now, that's only one direction. I need the other direction. So I'm looking for a pullback. Now, typically I'm looking for a 3 to 5 bar pullback towards the 18, and I want the 18 rising with the 40. All right. Now, I'm going to give you a couple different examples where that's not necessarily going to be exactly the case, but we're looking for a strong move, and then we're looking for a pullback towards the 18. We need to be in the area of the 18. It doesn't have to touch it. Sometimes it might go through it, but it has to be in the zone somewhere around there. All right. Coming close to it. And again, it could be 3 to 5 bars. This was actually a 7 bar pullback, but if you notice, it got really far away, and the angle of ascent was pretty orderly. It wasn't steep. And if we have a big move like this stretched away and it takes 7 or 8 and it comes in a little bit more violently, then I'm a lot less interested. But in this case, I would be interested in taking a look at that. Now, I'm just going to scroll back so you can see. So what I'm looking for on the smaller time frame is where the 18, the correction has taken enough time where the 18 actually crosses down below the 40. Okay, so in this time frame, the 18 is above the 40, but in this time frame, the moving averages have flipped down. The 18 has crossed down. Now, I know there's a lot of back testing that's done that say downside crossovers don't make any money. All right. I mean, if you just play downside crossovers, well, I'm taking advantage of that by understanding that the bigger time frame is going up. All right. And I'm waiting for this to fail. So if, let's say, 60 to 70% of the downside crossovers don't work, well, I'm going to be on the opposite end of that, and I want to play this going back to the upside. But the reason I'm doing it is because I want to play this time frame. All right. So we can take this, and I have multiple different ways of entering on the smaller time frame. I have 4 different trigger mechanisms that are based on the moving average setup, but also what the MACD and the ADX are doing on the smaller time frame. All right. And that will help with our timing. I can't get into all that detail now because this is just a brief little lesson, but I want to explain that part at least in detail. Now, if we start to scroll forward, I want to show you how we had the same setup again. Now, this is a little different. If you notice, this took 7 bars. This had the same kind of strength to the upside. Very, very powerful move based on MACD and ADX. And then we get a 3-bar pullback and it was 3-bar pullback, and then we had an inside bar right at the 18, which is rising. Now the 40 is rising too, but it's just kind of getting going here, if you notice. And then on this time frame, we had, MACD overrun a little bit. And we had a little bit of strength in the sellers, but then it finally dissipated. And we had a new emergent move to the upside. Essentially, this time frame is the time frame I am playing. I want to buy a strong move with a pullback, and then I'm going to use this for the timing, and I'm going to use this to reduce the risk. And I'm going to, wait for this to show that it's starting to move to the upside. All right. Now, I want to give one more example on this one where we had a 3-bar pullback here, but notice how mild it was. It didn't have a lot of deep movement, and it had a couple narrow range bars. But the 18 is turning to the upside, and we have MACD crossing back above, forming a pinch, and green DI is starting to show a little bit of life. So I can look for this, and in this case, we only got the MACD to come back down to 0, and the buyers are still showing strength. So when I see that, I'm usually using a more aggressive entry strategy. I'm not waiting around because it's so strong that it really doesn't want to pull back very much. All right, let me just give you a couple more examples to give you a better feel for this. Let's look at JP Morgan. Look at this on a weekly and a daily. All right, now I'm just going to use the last one. You can see how this kept on pulling back to the weekly 18 after showing strength to the upside. We get a pullback. Here's the strength to the upside, and then we get the pullback, and we come back down towards the 0 line. Not a lot of strength in the sellers. And then this is emerging again after the 18 crossed down below the 40. Price crosses back above and emerges back to the upside for a nice trade. All right, this is the pullback here to the 18 and the 40. So that's happening on a weekly and a daily, not a monthly weekly, but a weekly daily. All right, let's look at another example. Let's go to the downside. All right, now look at UNH. Strong move to the downside. And then we get a rally to the 18, which it's right about to cross the 40. But you can see the violence of the move. You can see the MACD crossing down. You can see red DI starting to show sellers are strong. And then we get this opposing trend pattern where the 18 crosses up above the 40. And we know that we have a setup in place. We can draw our trend line in place and look for an entry to the downside. All right, so I'm giving you a number of different examples. I just want to make sure you understand there are variations around a theme. All right, the theme is strength in one direction and then a retracement. That retracement will also often take place somewhere in the area of a 50% to 38% retracement. All right, it'll often look like a flag, in this case, a bear flag. All right. But on this time frame, this is where we're keeping it simple. We're looking for where the 18 crosses above the 40. Now, if you go back and look at what I was talking about in CRM, if you notice, this actually didn't cross below. This is a variable that we'll use when we have an ABC correction, but it doesn't show a lot of strength to the downside. We're going to use an alternative entry. But for the most part, we're looking for where the 18 crosses down below the 40. These are still rising, and we take an entry looking for a reversal back to the upside. Again, there's about 3 or 4 different strategies that can be used, but if you keep with the simple concept of I want to buy strength on the higher time frame, look for a pullback, a 3 to 5 bar pullback in most cases, back to the 18, and then look for it to reemerge back above the moving averages on the smaller time frame. You've got a really good basic structure for a simple pattern that can be very, very helpful. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. My comments are for educational purposes only. Please do your own due diligence before making any investments. So I did want to follow up a little bit with respect to why I decided to talk about the strategy, the simple strategy. And I think we're in an environment where trading is going to be a little bit more at a premium, meaning I don't know that we can just get in something and watch it run to the upside over the next few years. I think we're, at least for the next 3 to 6 months, my thinking is that we're going to see a lot more chop, a lot more trading ranges. Now, what we could see, or bearish move, rally back, retrace, right, and then get a trading play and have this type of a play in both directions. All right, and I think that's the way things could play out in the near term. So we need to be on the lookout for those types of strategies. I think, at least for now. All right, now if we get a definitive move in one direction or the other, I guess that would change. But let's just look at what's played out here. We had the QQQ, which is very similar to what's taken place in the S&P, which is we haven't had ADX confirmation on the weekly chart as we've gone to a new high here, starting in the fourth quarter of last year and continuing this year, where the ADX stayed low. Buyers, the green DI, just was unable to do anything, and it really has even died off, right? And then recently, the MACD did not confirm. Now, that's on the weekly chart. Now, if we look at what's taken place on the daily, it doesn't take a technical genius to recognize the size of these bars, these big red bars, and look at the size of the volume. All right. I almost don't have to look at this. I can see there's pretty strong distribution taking place. Now, what do? We undercut this prior low. We haven't had any follow through, and we had an indecision bar yesterday. So that could set the stage for a little bit of a rally, because look at how far away we are from the 18 and the 40. If you notice, when we broke the 18, it was actually still rising. So in a lot of cases, you will get some kind of a retracement. So let's put this in perspective. We could have a pretty substantial rally. And I think people who are not looking at these charts could look at this and say, wow, this actually looks like it's turning around. And it could be. But here's how it's going to have to play out. If it's going to turn, I think we're going to need to get back above this undercut level and then test it. And if we can do that and turn back up, then I think we have the makings of some kind of what I would call an undercut and rally type of pattern with pretty good volume climax, right? Now, these are going to lag in a situation like this. They look really negative right now, and they could be foretelling continuation to the downside. However, if we get this kind of sharp reversal, and what I tell my subscribers is, look, when we have a sharp reversal like this, these are going to lag, and you're going to have to accept that these indicators aren't really helping us right now. When there's a lot of volatility at a low, normally at a low, and it's violent in the way it's playing out, it's going to take a little bit more time to get the MACD and the ADX to kind of confirm. So that's why we want to look at the volume, want to look at the price action. I mean, obviously, we're going to need a big green bar in here somewhere to kind of reverse the selling pressure that's taken place. I mean, those are pretty big distribution bars, and so we're going to need to do that. That's one thing that could happen. Now, if we just rally back up towards the 18 on lighter volume, right, and this doesn't change, and this just kind of pinches in, then I think we need to be ready for another rebreak of this key low at 500, and then we could see more downside risk that would show up, probably as a test of the 18-month potentially, or maybe just coming down to the next support zone, which on the QQQ is probably, I guess really we're looking at right around the 18-month line, I think is the highest probability. On the S&P line, it's around 5,500, 5,600 would be the level I'd be watching. All right. Now let's take a look at the IWM, because this has deteriorated a lot more. We've seen a lot more deterioration, and it looks like we're breaking the 18-month, and the relative strength versus the S&P has gone to a new low. This really isn't what we're looking for. The other thing you can do is just a quick check on the momentum. You can see the RSI 20 is now clearly below the 50 level. All right, it had been above for the better part of a year, actually an entire year, and now it's below that, and that's just not a good sign there. Now, we haven't gotten any confirmation on an ADX basis on the weekly, but on the daily chart, the ADX is climbing based on the sellers. All right, you can see that because the decline phase is causing the red DI to move up, And that's what's getting this ADX line to cross above 25 and keep going. So, it's not the type of price action we really want to see in an environment. And it also isn't what we would expect if the market's getting ready to make a big move to the upside. All right, there were a number of requests that came in. I want to make sure I cover all of them. So when I look at this 3M, I think what's taken place here is we've gotten a pretty dynamic turn on the monthly chart. We got it back above the 18-month, and we had a really mild consolidation pattern, small pullback. It didn't really get that close to the 18-month line, but it does qualify as a pinch, right? And we're showing improvement in the ADX. Now, when we get this far, when we're this far away, I typically am looking for it to be the pinch play to be more of a trade rather than, the start of something big, especially when there's a lot of resistance to deal with. So we're dealing with that. And then if you look at the way this played out, we had a reverse divergence signal where this was actually making higher lows here while this made a lower low. And the ADX stayed strong with the buyers in command. And then we broke out on this green bar, pretty much kicked in. Now, I still think this looks pretty good, but I don't like the most recent action. So I'm more inclined to believe that this wants to come back and do maybe a better test and see if we can't get this a little bit closer to the 18-month, which is where I would be looking the next time. For the next setup. All right, now here's one of the better looking breakouts in the marketplace right now. Massive base, big move to the upside with ADX confirmation. Look at the volume pattern, right? MACD hitting a new high, but we're back up against the high. So we need, and we've been up several days in a row. We need some kind of a pullback. It might not come all the way back to the 18 on this time frame, but I'd like to see at least come back a little bit closer to the 130, 125, 130 level, something like that. But big breakout, nice pattern. We have a low ADX on the monthly chart and a low ADX emerging out of that to strong ADX. Really what we want to see with confirmation on the daily chart. So we just need a pullback, and it needs to be orderly. If we get a violent pullback, we got to be pretty careful. All right, so I actually like, this is a different setup than ABT, which was more of an emerging breakout pattern, right? Early in the trend. This is more of a continuation signal, but we are respecting the 18-month line. Now, when I see this overrun, I'm more inclined to believe that we have to come back down and set up again. I don't think this is going to be ready to break out on its first try. So what we're going to be looking for is an orderly pullback towards the 18-week. If it can do that, then I would consider it as it turns back to the upside. So certainly a stock that's worth watching. The relative strength line has improved. There really hasn't been that strong a selling even through the correction phase. So it's still in play from that standpoint. All right, look at Amazon. It's pulling back and it's getting a little closer to the breakout level. Pretty good support here around 200. But in the process of doing that, we have the MACD line crossing its signal line, all right, and the price crossing down cleanly below its 18-week line. So I'm sort of inclined to believe this is going to take a little bit of time. We just have to be patient and see if this can make a bottom here above the 200 mark. I think if we break 200, then this pattern ends up looking like it's coming all the way back to the 18-month line, and the process is going to take a lot more time. So just keep an eye on it, see if this can set up. But right now, below the 18-week, I think we got to be pretty careful. Now, Deere is a pretty impressive pattern because we broke out of this big base, starting to show signs of improvement, especially in the green DI. You see the buyers starting to step in on these moves to the upside, MACD confirming. Now we're getting a pullback. Now the question becomes, how do we handle this pullback? Well, I mean, if I look at this on the daily chart, it's sort of telling us this rising moving average is now flat, and that this is probably going to have to go sideways for a little bit. I think this needs more time in this consolidation phase. As long as it stays above 450, I think the shorter term pattern is okay. I think if we re-break these lows, then we could be breaking the 18-week, and then this ends up taking a lot more time, maybe even pulls back a little bit closer to support on the monthly chart. So got to be careful right now, just with all this volatility. I just don't think, especially with what's happening to the daily charts, I think we got to be a little bit more careful about this diving in. So I had some requests on a few of these from the Shanghai index. And I think we've got a pretty good double bottom forming, right? I mean, there's pretty good support here around 100, but it's on the early side and there's a lot of resistance overhead. So I'd like to show you a couple that I think look a little bit more attractive. Look at LI. Another request that came through. So we had this drop. This started to show signs of improvement, and we're coming up against some resistance here, which I think gets a little bit more serious up around 40. But we could get a trading move up towards that area as we try and emerge and kind of reverse things around. The momentum on this time frame on the weekly chart is actually looking a lot better. So, I mean, I think it's something that I would probably view it as a trading play. But sort of some signs of improvement. But the resistance, I think, is going to be serious as we work our way up towards 40. Now, I think the best looking one of the group that came through here was this. You can break this downtrend line. So if I draw this downtrend line on this NTES, I can do that. I can see we've broken that, and now we've pulled back. MACD is in position. ADX is in position. The MACD on the monthly is turning up. We're back above the moving averages, showing signs overall of improvement. Now, we do need to form the two. I think we need to make a higher low here, but certainly one that I think I would be watching pretty closely. And if we look at this ammo, we're pulling back. We have earnings coming in a couple days. All right. So let me just give you a precursor to that. We were below the 18-month. We've rallied up and we're below the 18 months. So I don't know that I would be all that interested in playing this below that. I know we're pulling back on the weekly chart. And yes, maybe this is setting up as a trade. The problem is it's not really set up on the daily to turn to the upside. I don't really have a potential trigger in place. I think it's going to need to come up and come back down and then maybe consider it. So let the earnings come through, see if the chart is not damaged through that, and then you could potentially play it from a trading standpoint using the weekly and the daily. Thanks for joining me today. So if you have any stock requests, you can send them to stocktalk@stockcharts.com or just put it in the comment area below. Also, if you want to learn more about some of these techniques, I would go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.